This conference will now be recorded.
Good morning, all. This is Fahmy Hamzi. It's 8:52 a.m. Eastern on the final day of April. Final day of April. Tomorrow is May 1st. May Day, yeah. It's May 1st. So and next week is Cinco de Mayo on the 5th. I see on Wednesday. Okay. Keep in your calendar a special webinar we're doing on the 4th, which is a Tuesday. We send a note out. If you follow us on Hamzi Analytics, our main broadcast setup is we give our notices, market comments, some politics, music, medicine, that kind of stuff. And if you follow us there, you could see we gave you a special link there that said a special case. You click on that. You went to a tweet longer because a long message, and there was a register. Use that to register. It has to do with a special case of OTF, that lineup. It happens about a couple of times a month. You want to learn what it is, maybe once a month. Admiral plays it with our options, of course. And then the way he played that option is another one. After I put this out, I figured actually what he's talking about. Yeah, it was over my puny, brain at first. I thought I knew a little bit about options. And Jack laughs and he goes, yeah, I know a little bit more than average. And it's just the way we did. And he did about 165% return on that. Sometimes you're going to do better, sometimes you're going to do less, but it's the sign up. It's a setup that you go through. So don't miss that. This is the link. You go there. This takes you to go to webinar and you sign up. It's a special case study. Okay. We will continue to highlight things as we learn more. As you know, this is a new technology. We don't have all the answers, but as we notice them and we see it's working, we see the potential for them, we'll share that with you. Okay. Tuesday, 5 p.m. Eastern, 4 p.m. Chicago, 2 p.m. LA. Okay. It will be recorded, always recorded, and will be posted. If you register, we'll also send you the copy of it, even though you're not part of the website, for example. Okay. All right. I know next thing you're gonna ask me is VXRT. Okay. VXRT is a special setup. A special stock. It's a COVID pill. COVID vaccine pill. Remember, not everywhere is Las Vegas or New York or or South Florida where you have ACs and air conditioning. Cars run well, and you have you can go to a pharmacy and chill. Good portion of the world does not have refrigeration or AC. For example, India, 1,366,000 population in India. If you add the major cities, you won't make 100 mil. You won't even make 100 mil. Okay. So, the rest are in small villages. I remember we did a well in northern India. Not me, but my name was put in there because of our indicators. Our indicators were used by a hedge fund out of Ashley Goldstein, out of Denver, Colorado, I think Boulder, out of Boulder. And they have green investors. So what happened is that people came in and said, hi, Jeff, how are you? Welcome. I've just started. We're talking about VXRT. They come in and they said, give 5 or 10% of the profits back to third world in ways that not give them cash, but improve their lives. Well, somebody said, well, don't we give them water? This is unbeknown to me. I have no idea. So 2 years later, I get a special FedEx, and it's a damn thing. It's huge. I think it's one of my Twitter feeds. I put it there. And we finally got it framed and all that. It was charitywater.org, charitywater.org, and they said that, yeah, you've been named to be put in this well that's been drilled in this village. 12 people live there, and they have never had pipe water. They had to go up to the streams, get some water from the stream, and come back. Never had well water. So there's no consistency of water in India. I think we're now drilled about 100 of them, approximately, between Africa and India. you know, it makes you feel good. It really does. And it came for all the profits. I wrote the code. They traded, they put some money behind it, they traded it, they made lots of money, they give some of it back. So this, the right think of XRP, I think of India, or Africa, where COVID pill has a long-term shelf life, maybe a year, maybe even less, but it's a shelf life. It's a pharmacy. You don't need, you can carry it in a car. So that it doesn't expose to too much heat. You're fine. You just don't need to be refrigerated or sub 74 Kelvin, whatever. No, just get it there. And no syringes. That's another thing. No syringes. No, in some countries, lack of syringes has created, and it has in the past, it will, transmitting bacteria and microbes from one body to another. None of that. Now, here what they did was that this is what they came up with, that they're working on that. This is December. I'm saying this is February, but in December we knew something they were up to. This is an idea from Marcus Posito. He's got a very large position on this. I know the size, but it's several thousands. Okay. His hedge fund, his biotech hedge fund. He's a biotech guy, basically. He used to be at SIBO. He ran MRK Pharmaceutical Pit, which is a Merck Pharmaceuticals, the ones that they worked, I think, with the J&J this time, on the manufacturing side, one of the largest biotech companies. He was their main DPM, designated primary market maker. So he knows this space really good. It was 27 years at SIBO, so he came to me and said, Barry, the problem here is that they had not done, they're going to COVID, application to FDA, they have not done the primate. They went from hamster to go to human in a rush. They thought they would get an exception. And what I am saying is that Boycott said no. FDA said no. And so they went back to do the primate. And so that gave it a 60-day window. We started accumulating. As it dipped down, we bought more. Some of my family, bunch of affiliates, bunch of friends, a few people in New York and the hedge fund business are into this. Our goal is to see if we're going to catch this. And then, as you know, if you get into growth environment, he's usually double. Usually, they go because you go percentages. So next goals would be, if we get to 24, I think there's a chance it could go to 50 and then 100. This is going to be huge if it goes well. Very high risk. Very high risk. I'm saying it twice. Very high return. It's not for a faint at heart. You can always go back to your daddy's or grandpa's AT&T bonds. This is not it. But if you get accumulated down here, as we said in this webinar, as we said in chat room, as Nancy talked about it, as Admiral talked about it, you'll be surprised that yesterday hit 11. Okay? Again, do your homework. Risk is high, return is high. Not for a faint at heart. It's not for your last dime. Keep your last dime. Go buy yourself a cup of coffee. Good luck if you get a cup of time. But no, you know what I'm talking about. This is going to be super risk money. I know it's not going to go to zero. I realize that, but we're at 11 now. When we were telling you, look at it. Beta 5 to 6 is a good entry period. And my brother, my sister, bunch of cousins, number of affiliates here, and number of folks in Los Angeles, Florida. I mean, outside of it, and number of people in New York are in it. Now, of course, I don't know how many Admiral has in it. His friends in Chicago, but that's it. We will go up together and down together. We'll see what happens. It's a little fun. But we also, if something happens good, it's good for the overall, not just the population of third world and fourth world, but also the US. We cannot fully be safe here if there are travels going on. And it doesn't have to be direct, it could be indirect, as we saw in New York. They stopped to China. Chinese are doing clothes. Where do they go for clothes? Milan. Where do they come from? Italia. They go to New York. They want, they want Mama Mancini's pasta. So they came to New York. They brought us all the mess. So travel is, we've learned our lesson. Travel is international. Business is international. So we need to take care of everybody sooner or later. Otherwise, they'll always live with us. And then future mutants are going to be even worse. Remember that. Data and science don't lie. Politicians do. Let me move on, and don't get me started with this stuff, okay? All right, let's go to econ calendar. We talked about the webinar also. Again, the webinar is here. We posted it. Is on oops, no, that was catered. There we go. This one right there. We'll send it again. Special case on Tuesday. Okay. Click on the link. It's go to meeting. All right. And if you can't attend, we're recording it. We will send you a copy of the recording. All right. We will, by the way, we will invite everyone here. We put on Twitter and all that once a week. We usually do it on Wednesdays, but I'm sorry, this my Wednesday was very, very rough, busy wise. Yeah. Look, I'm trying to get back on the horse. Hasn't been easy. Got my COVID done. My psoriasis is doing much, much better. And so, but it's still a struggle. I'm about 3,000 emails still behind. All right. Econ calendar. As you know, we do a few things here. Every morning, the morning we start. I mean, every other day that we start, 3 days a week. There's a welcome and some catch up on the housekeeping. Econ calendar, PMT charts, and then overnight with OTF. We try to keep it to 20 minutes or so. It's all recorded and posted on YouTube. Oh, for YouTube to see it, you go here. Okay. And they're posted here. Okay. So that's how you get to that. All right, let's go here. Okay, it's the last day of the month. ECI came in at it's a green report and personal income. We have 945 Chicago PMI and sentiment. I want to see sentiment even though it's green. Of course, PMI. Well, let's see what employment cost index ECI came out. ECI. This was a favorite of my liege, Benjamin Nank, head of economics department, Princeton. Not right over there. No, after that. All right. We're slowly edging up over consensus. That's good. Slowly is good. That's good. My fear has been this will be seen on the low side because of, again, I'm not an economist, but I just learned it from here because I need to learn. Or at least think I've learned it. As you look at these things every day. My first burn in this business was in futures, was the first non-farm. But the second day I was trading futures, was bond futures, 100 to 1 leverage, and was non-farm payroll. Since then, I got hooked. Once you burn like that, I burned, I think, 4% and change that day. And that freaks you out. You just say, what? So you're starting a new fund, the second day of trading, and a bunch of friends and family have given you a bunch of money there to put in. Second you get an account and you burn 4%, 4.5%, 4.5%, 4, 6, something like that. I know it was under 5, it was devastating though, devastating. So you go nuts. So I start sticking to these things and these new, there'll be a lot more data. They're all added. So you need to learn a few of them. Personal income, this was it, the red dot. So we need to look at that. Okay. I have not looked at these. I treat these just like you do. I come in to a webinar, read it like that. This is not production, and we don't go through Hollywood stuff, you know. There's no script. No anything. You get it as it is. We have edited one webinar, and that's going to show my password. And there's like 5 seconds missing because my password was there. Of course, we changed our password, but still, because we had present too. We were present too, but that's the only time. And I bought this editor, I haven't touched it since. I don't even know how to use it again. Practice makes perfect. Okay, 7, choose. Nice. Okay. Okay. This is in line. That's in line. Okay. Near the range. I have the range. In line again, 4.2. Yeah, this is coming fairly much in line. Okay, no surprises here. Okay. I think the push down basically we're having is from numbers yesterday from the maybe Amazon. That's it. Tremendous quarter. Okay. Chicago PMI, what to look for at 945. This will happen in the RTI. ITH, actually, ITH. Regular trading hours. So keep that in mind. Okay. 64. Okay. The reason I look at it now is before when it pops, we're gonna have a few seconds while the market is active at that time. I just need some number in my head. 87. Okay, no worries. We got it. The last day of the month. Next week, we got first Friday would be the first day of the first Friday of the month. You have non-farm. That's it. Busy week. Second week, we have some data coming in sprinkled. Second week will be a little bit less data, but with CPI, PPI in there. Third week is options, and then fourth week is this. Again, the big number this week to me was yesterday, was GDP, and we got that. And that came in. And of course, every week we have to look at job list. 6.4, tremendous. I think this is the highest I've seen in GDP. So, but that's because you have pent-up demand, and we're coming in measuring from a very, very low bar. That's okay. Okay, let's go to timer digest. I'm sorry, timer market timing, PMT. Excuse me. Yeah. The status of timer digest, because you guys keep asking, I understand that, and this is a way to respond. As you know, I cannot get to everybody if I sit down and respond individually. So I try to use audio, video, and these gatherings to answer questions, share the question without naming who it is from, and the answer. This way avoids waste of your time and mine. And we can work on more crucial stuff. As you know, we only have 24 hours a day, each of us. Okay, I've been short with SPX. I'm really taking in the pants. It's not good. But I avoided giving you guys trades that evaporate your income, your cash there quickly. I don't get it. We have no business going up. We have no business. Things are getting better, but markets already discounted that. The risk reward is wrong. Risk reward. We have a very small upside, and we have a lot of downside. What we haven't seen is the catalyst. I know I've pounded the table before, saying over the years, those of you who've been with me, that look for catalysts. It's not just why you think technically the market is up to go up or down. You also see that it accepts the reason, subscribes to that reason, and moves. We haven't seen that yet. But we're getting close, I think. There's a seasonality, there's what the market is, there are these charts, and now we got tax issues coming up. I'm thinking the market says some of these tax stuff is not going to happen. If the tax stuff is not going to happen, why huge rally yesterday? So we'll see. I mean, you can't just print free money. Even free money has costs. So we'll see. Now let's look at some evidence. Look at the data. Look at the indicators. Bearish divergence. Higher, higher, higher. This is all time high, that line. Okay. Higher, higher, higher. We just keep on making new highs. Okay. Within reason, within +1, +2. We're not making excessive runs. Look, we didn't hit the 3 sigma. +1, +2 sigma. These are sigma levels, right? That's the 2. This is the 1. If you know my work on this. If you're in this channel, you're going to slowly go up. If you get to 3 or 2.5, 3 sigma, there's a chance you can pull down. But look what with indicators, lower readings, lower readings, lower readings, even if we're higher. This is what's called bearish divergence. So warning number 1, breadth trust, same thing. Totally different calculation, totally different input, same. A little bit off, they don't line up, they're not going to be always in phase. Don't be a perfectionist. Market isn't like that. Why? Because there's a chaos in order flow. You buy, you sell for a number of reasons. Somebody wants to have a wedding for his daughter. Kids are going to college. Somebody wants to buy a bigger house. Somebody has a tax liability. There's just so many things come up when you buy and sell. In aggregate, what we look at. Market is always right in aggregate. It's not you and I. It's not one person or two. So, CI diff crossed. I'm saying CI cross. CI diffs are negative. We're beginning to see slow momo to the downside, but it has not manifested itself in anything substantial in our observations. But it will. We always will go fear to greed, fear to greed. That's the cycle we're in, whether on a volatility basis or on price basis. Trust me, I've looked at the stuff more than most people out there. Look at it over time. Not sure at the beginning I understood it, but it created my curiosity to solve it. Well, most of my academic work was on volatility, so that cycle because it's a little bit more predictable than price cycles. But those are stuff you want to look at. Fear to greed, fear to greed. You know, when we do this green dots that we talk about on the OTF, it's all about fear to greed cycles. And they're not equally distanced. People look for cycles and say, oh, it's going to be pretty. You got to do this. Or Bijan Khazri, he writes this huge screen and all that. Try to estimate. He moves these things around. Don't. It doesn't go that far. You don't need to. You can't be that exact. Don't hold yourself to that standard. Be more practical. DT. This is the trend. All right. There's a little faltering on Russell. Yes, yes. So again, this is not confirming these run-ups. But we had an upside bar yesterday. Trans went up. SPX went up. Outside bar. Three outside bars out of 4. 8 out of 8 positive. They're all positive. You have the trender. The trender, again, as a quick reminder, is the difference between price and the moving average. 50 and 200. So this is a 20. This is a 50 DT. This is a 200 DT. Okay. D-trending. You're D-trending it. You're trying to figure out how far is the rubber band. Let me push it here like this. Yeah, this is what scared me. This stuff. This. You get up here. Yeah, especially I'm saying this one was huge. This one, yeah. But we got there. Look how long it took to make another high. We haven't made it out since. This is way up there. It's a rubber band. That's 35% separation between the peak and the corresponding 200 there underneath it. These are not sustainable. Not. Statistically speaking, you may get a surprise. You one-time may move, but don't count on that. SB1 Momo. Long and long. This is a mechanical system. You know the story. Last buy was on the 30th, April 1st. So, and like the day before that, I went short. So this whole month of April was a miserable month for me. But look what we're seeing here. The new highs. This is 52 weeks highs in S&P. Yeah. If we edge up a little bit more, then you could see what we saw in the May of 2008. Now, this market is not 2008. We have Dodd-Frank. We don't have who was the guy? Fold, the guy who ran Lehman. We don't have that craziness. Okay, the balance sheet of the banks are very strong. We have good compliance going on there. But usually when you hit 140, 160 up here, that's about maybe a month ahead of the roll down, the adjustment, the bias change. Plus, you sell in May and go away. That's the seasonality issue. So slowly we're getting data to show that case that we should be rolling over. So I'm reluctant to go long here. Okay. Last time I was in a spot like this and went long was when I was very, very sick on let me go here. Let me see. Where's my no downloads? No. Desktop. I think it's downloads. Okay. Where's my what am I going to try to? Oh, so 1 second, guys. New images. Ooh, there we go. Okay. Here's what happened to me. You see this area? Yeah. I was short. I went short. Market went up. So I dropped. Then market started dropping. Yeah. And as I went long, market started dropping. I lost it back to back. Not doing that. Not doing that. Okay. And that was the time I was in so much pain. But you miss your sleep, and that was back into the accident, the car accident. You cannot function properly. So I'd rather go flat and don't give you no trade, because that's advice itself, until this thing gets back to normal. But we're not that far away. I don't think so, if history is any judge. Okay, we're edging up. This is today. We're edging up on volatility. Look at the vol of the vols. This is vibration of volatility itself. It's like a second derivative of VIX type of deal. I'm saying first derivative of VIX itself, yeah. So we're trying to figure out what these vibrations are. You can see how they peak at 3 and 4 sigmas. They always do. They always do, my friend. This is what we call the shock waves. You see the shock waves coming. Okay, so now we have no business to be at all-time high with 18 vol. We have set it, we pound the table, we'll continue to drill that to your head, say it. Ask yourself, why are we at 18? Well, this is a COVID. Remember terror premium on oil prices? This is COVID premium on volatility. Okay, SQ flat. SQ is flat because we dipped down a little bit yesterday. Actually, SPX went up, was NASDAQ dipped up. Okay. SQ is a tail risk, which it measures the through a very complex calculation. That's posted, by the way, on our website. On Steve. It was made by Steve. It's measured once a day. It's posted after the first hour, after the close. So it's like 5 p.m.-ish. We get to that data, Eastern, of the what the potential is, and there's a table that transfers that. It shows that the time this thing let me see if I can find this quickly for you. The time that this not a time. What's the good this? It's in our. I've got to find it for you. Hold on. Let's not go there. It's a risk, a tail risk of SPX put options out of the money. Remember, this is SPX was a big boys, not SPYs. Mom and pops never get this right, and there's always noise, and there's all kinds of pressures on them. The bigger guns come in and hold the position. Okay. Remember reservation with Seinfeld? You can make a reservation but not hold it. This is what that difference is. You gotta hold the position. Okay, so that's something that we need to be cognizant of. Okay, and so I'm doing a search here. Hope we can find it. I don't know where it is. I know it's on the, what do you call it? I know it's on our PMT stuff. Now here's a problem we have with PMT. Some of the archives are not opening up because of the browsers. This browser wars have been horrible. Hold on, you can actually come into this. Let me log out. Let's see. You can come in through this one. There's a preview on PMT. Shows you old thing, but let me go there. Let me go to 20. Let me see if I can go to. Okay. Oh, this is loading. Interesting. Okay. Here's what the table I'm talking about. This table. This is what I was trying to tell you. This table. Boom. Okay. This is what you need to realize. I don't know what's the file name is. We'll figure it out. But anyway, how does it come? This is from the white paper from SIBO. This is the values mean. We're running at what's the risk? We're running 140. So there is a 13% chance of 2 standard deviation move and about 2.5% of 3 standard deviation move from where we are now on SPX. Okay, so SPX is up to 1, 2. So there's a 13% chance we can go to 4,091. Okay, 3% that will go below that to 4,042. Statistically, that's not very high. Okay, but now look where we were here on Friday. I'm saying on end of the month last year. Yeah, no, I'm saying March 18th. Sorry, it hit 148. So we go back to here, 148. You see a chance? Yeah, like over 15%. The design, by the way, is 150, but we have seen it trade, or I mean, computed to be. It's index, not tradable. It's the index that's computed to hit 159. It's all-time high. That line's always all-time high. That color, the golden bar. So 148. That's where we were March 15th. Now the forward view. What's the time cycle forward? It's about 2 months. So 8 to 10 weeks. 8 weeks, 7 to 10 weeks, something like that range. Again, it's not precise, but it has never failed. It has never failed. Some of my best shorts are based on that, including the famous February 12th, right back here. When everybody laughed at me, and I was going berserk because I was about to lose quite a bit of money myself. But I believed in that because one contact with Goldman referred to one contact at CDC, 2 words, Chemical reagents. I shared that with you guys. You knew it. Chemical reagents. So we don't have it. Who makes it? Oh, China. Oh, really? And now we're fighting with China? Just remember the trade war and all that. Mr. President Xi is a good guy. He's working on this. Right. Yeah. And then next word was no. It's Chinese virus. Remember all that, those things, the chaos. Yeah. All right. So moving forward, TD. Slide 23. We got a few minutes only. Okay, rendezvous point complete. Stock RSI. There's another rendezvous point is coming. Remember, no one indicator is going to tell you what to do. Not even two, not even three. It's an amalgamation. It's a preponderance of evidence. Okay, it's a civil court, not a beyond a reasonable doubt. If you're looking for a bit beyond a reasonable doubt, go somewhere else. This is not it. Yeah, no, it's not the market. By that I mean it's not the market. So this is say this one was met. We got another one coming up in this cycle. Now, how far, how deep, we don't know. You observe every day. You observe. That's what we thought. We were doing this 3 times a week. It's more of a help to you guys. Rather than me sitting on Sundays, keep writing, posting this, that, and typing and errors and the web page doesn't go. This page is much, much more value to you guys. Some people don't like that. They say, oh, I want to sit there and read that. You said that on the website. I said, guess what? I'm changing it. Okay. My work is changing. I have to adapt, but I know one thing. I'm gonna give you guys more value. Okay, and if I see that, I'll do it. And that's what we've been doing. Some people are not gonna like it. Fine. I'm not here to please everybody. I'm not in that business. I don't need to. All right, SP2. One of my oldest indicators were written originally like 95, 96, something like that. Slightly modified back in I don't know, 13, 14, 2013. I was in Chicago, yeah. Very, very small modification, yeah. The input were the same. Just a slight measuring calculation. Have not touched it, no, don't want to touch it. You keep touching your indicators, and you're doing a curve fit. You're telling it what you want to see. It's like working for Trump at the White House, telling him what he wants to hear. That's not reality. Look what the data says. Stop changing things. Okay. Then you have a reference. Okay, 72 halves. Again, look at the divergence. High, new high. But we're not getting there. It's not there. The Momo isn't there. Keep that in mind. Don't be surprised. Treasuries. Kind of surprised on treasuries. I'm not a bond guy though. I haven't traded 30 years in probably 25 years. 100 to 1 leverage. But I do pay attention to this, and we're very, very neutral. Now, this month is finishing. Monday, new levels will come up. These are monthly support resistance levels, monthly. So the SRPs, support SPRs, monthly MSPRs, yeah, monthly support, pivot, and resistance. Here's your support, here's your pivot, here's your resistance. And the shock that already came in, pulled back, now it's neutralized. The one I pay more attention to, just like most people out there, of course I'm a novice at this, is the 10-year. Some of the hedges that I deal with, they look at some sort of a marking tool there and say, okay, this is what we're looking at. This is what our area of interest is. Let me bring it to the same time. Yeah, this should be a little wider. Yeah, I should try to see things in the same time. So you could see now. This is a front end, obviously. The not implied, what they call it. It's a discount rate. So you got to do it 4 times to get a 1 year YTM. Yeah, to get an equivalent bond yield as a yield to maturity. These are yield to maturities. 5. We don't have a 2-year. I wish I had a 2-year. 5, 10, and 30. This is what I'm looking at. We were very worried about during the COVID at 1%. So we can get to a 1% area. Here we are. 9:27, 2 minutes to go. Okay. Quickly, overnight. Here's our, no, one more. You need one more shot. So let's see. Not that we have a lot of news here, but let's take a look. Here we go. I'm sorry, I'm running a little bit late. Catching it up. Okay. We're pulling back down. Now we begin to see another divergence there. Okay, we're pulling it down. Oh, let me close this. Okay. Well, that's obviously still going up. So this is 200-day moving average. How many percent of the stocks within components of S&P are above it? Being put back when we're at 96, 97. I told you I've never seen it up here. Never, never, never. This was brought to my attention by one of the Chicago guys right after I got there, which is 2008, right before all the mess. And we've seen a lot of times down here, we've seen a lot of times up there, and always in between, but never this level up there. Never. It's like this going to 1 or 2. Very, very highly unlikely. But so something's happening up there that I think part of it could be where the big money is parking itself before somebody yells fire in the theater, and then they all want to exit. So that's another tool that's telling us we're near the top here. At least a tradable top, not the top. Never claimed that. Not, I've been in the business long enough to know that's not going to happen where the top is, but near the top. Again, my goal is to pick the trend. I rather be right on the trend, not the price. If I get the trend right, price is immaterial. Because you want the nuggets, as FT71 says, go find these nuggets. All we're looking for is a bunch of nuggets. Golden nuggets and plebiscite. Okay. Overnight, very quickly, we're about to open. 1 minute, 1 minute to open. So let me get going here. Overnight, down 23 in 99. Okay. These are Excel charts for OTF, for ES, NQ, and crude. These are the 3 we run through Skype live. Obviously, come here on Tuesday for this. Special on that, I trade this. Of course, we got a bunch of guys like Johnny going to crude. With that said, let me close up. We've got to run. Cash is opening. Have a great weekend. See you next week.